Hello and welcome back to this new puzzle. Today we are going to analyze New Zealand dollar and USD dollar. But in the opposite direction, we are not going to look at this currency pair of one of the best trading scenarios, but we are going to look at why we should not trade during this week, probably tomorrow, to be more specific. So let's look at the economic calendar, and tomorrow, Wednesday, August 17, we have during the morning hours from the Bank of New Zealand monetary policy statement, interest rate decision, that is expected from 2.5%. It is expected to increase by 0.5% or 50 basis points. And after that, the Bank of New Zealand is going to have also the press conference. So this is going to be an event with very high impact and also volatile. It will create some volatility in the market. And if we go on the USD front, we are going to look at that tomorrow. We are going to have retail sales. That is going to be very important for tomorrow. And what is the most important news is the FOMC that is going to be during the evening. So both of these events will create a high volatility. So as we can see, from the New Zealand side, we have the interest rate decision and we have also FOMC from the US. So let's break it down and let's see why it is better for us not to trade New Zealand and USD tomorrow. So we have seen that on the monthly chart we have these candles, that this is showing a bullish price momentum here. And this is a type of pin bar candle, very nice pin bar here on the monthly chart. Also the support area that we are looking at from the left side of the structure looks good. Price closed only the wicks of the candles below the support area, so all looks fine on the monthly chart. So let's break it down on the weekly right now. And what we are gonna look at on the weekly is that price is making this type of wave. So this is how the price is creating, by making up and downs all the time. And here we have our movement, the first movement that was done on weekly. So the previous week, as you can see, closed a very strong bullish candle. So this is a very strong bullish sign. But we don't have to be very confident for the bullish movement from this point, because we have seen also on the past during the previous weeks, and look at these two candles here, how the price invalidated them and it came down again. So this was the previous movement that happened. We can be in this type of scenario again, so we need to be careful for this part. So let's just delete it and let's break it down on the daily time frame right now. What we are looking at here is that the first support that the price may face on the bullish side will be close to the top of the structure. This is the structure that we are looking at. So maximum expectation with the first movement will be the structure resistance, and after that we need to see if price is going to move higher, if it will continue in this way, or probably price can face also resistance and it come lower again. In this way, what we are going to look at here, probably price can create this type of potential head and shoulder. It is not created at all, it is just an assumption right now, what we are assuming. So let's go on the other time frame, and we are going to look at now a more clear picture, and this is getting tricky and risky as well as a trade. I'm just moving around the news events that we have. We need to focus on both news, and what we actually have here is that price is moving in this pattern, that it is actually expanding. I shared this pattern also on our group, and we can see that we have this price development. So let's say we have this type of movement, and probably the price can move for the E wave up. This is a bullish scenario, but what may happen? The Bank of New Zealand is expected to increase the interest rates, so the market is anticipating that movement right now. It can be very risky because we can see an initial price reaction. It can come close to the top or probably up to the middle of the wave, and after that the price can also move down by anticipating the FOMC event that is going to be during the evening. So this is one of the scenarios. The other one is that during this period of time we have seen also the price not to react at all during the interest rate increase. So we can see the price to break lower, and after that the expectations for a hawkish FOMC can move the price down close to the bottom of the structure. So these are the scenarios that I'm looking at. So let's assume that the Bank of New Zealand is going to increase the interest rates, probably with a type of surprise or any bullish pressure in the press conference. It can come up, and after that it can make also another movement down. So it's not that easy, because the invalidation of this expanding pattern will open the door for more downside again. This is the bearish scenario, and the bullish scenario is up. So considering that we are going to be within two fires, the Bank of New Zealand and FOMC, in my personal opinion, I don't think that this trade is worth to, or this currency pair is worth to trade tomorrow. So just stay away, because it will be within these two fires. The Bank of New Zealand can push it up, FOMC can move it down, and in both ways your position may be stopped out, in my opinion. So it's not worth at all to trade this tomorrow. So just stay out from New Zealand USD, as in my opinion this is the worst currency that you can trade for tomorrow. I hope you guys enjoyed the analysis. Don't forget to subscribe and press the like button for more future contents. Thank you. Bye bye.